You can find a ton of YouTubers, entrepreneurs, so-called gurus, forex traders, but there are very few creators that is willing to take you through their journey in how they make their first $100,000 in a year in making money online and in their online business. Hey, what's going on, awesome people of YouTube? My name is Jay from the channel Millionaire Mindset. I'm a full-time prop firm trader, entrepreneur from South Africa that documents my journey on my YouTube channel on various ways that I used to make money online. In today's video, I'm very excited to share with you how I made $6,000, aka 115,000 Rand in one day forex trading with my specific prop firm. If you're not a profitable trader or want to learn how to make money online and specifically grow your forex account on a weekly and a monthly basis, this YouTube channel is for you, because I'm going to document my journey, my profitable trades, my losing trades, how I understand the market and read price in my own unique mechanical way with my mechanical system that I use to trade the markets. I've been day trading for 4 years, and it took me about 2.5 years to become really profitable and to become a full-time trader to be able to rely on that income. I'm going to give you some insight into that journey and how I trade, the platforms that you can get started, how you can personally trade with me, have a look at my live trades, and also learn with me in how I teach my SMC and ICT concepts at the end of this video. If you're new to this channel, make sure to go down below, leave a like on this video, comment down below, and make sure you're subscribed. If we can get to 200 likes on this video, I will do a $50 Bitcoin giveaway in tomorrow's video and announce the winner. Before we hop into my computer, I want you to understand that my YouTube channel and the way that I teach trading is not some kind of magical fairy dust that is going to fall into your lap and suddenly make you rich. That kind of thing in the markets does not exist. In fact, it does not exist anywhere on the internet. You need to take the concepts that I'm going to teach you in my videos and actually practice it yourself, apply it on your own charts, and train your minds to read the charts in the form of structure that I'm going to explain to you. This is not something that you're going to get overnight, but it took me a few months of practicing this every single day. I've put it into a much simpler, mechanical, rule-based form that will make it easier for you guys to go and see and to go and practice. So I recommend watch this video until the end. Don't skip through, because I'm going to highlight some very important points as we go throughout this video in how I made $6,000 in one day and how I make about 3 to 20% per month every single month on my prop firm account. And I'm briefly going to go over the XAU USD trade that I took on Thursday. So first and foremost, the number one point you need to go and do in my rule-based system if you want to learn how I take trades like this, yes, I do take losses. So my style of trading is a very high risk to reward, but a much lower win rate. I have about a 30% win rate, with on average 1 to 10, 1 to 20 risk to reward catching the full runners. If I include my partial and BE trades, which are still profitable trades, that means we just hit TP1 and kind of go back to break even. I then have about a 70% win rate. Number one in this rule-based system that I want you guys to practice and follow is firstly, come over to the 4-hour time frame. So this is all rule-based. You follow the exact same set of rules and you will start seeing it clearly yourself. So what I'm going to do is I'm going to open up another gold chart that's just clean, because I don't want to remove all of my analysis on the current chart. All right, so I've opened up XAU USD, which is the gold spot US dollar on the Forex.com data feed on TradingView. So what I'm going to do is I'm going to remove all my drawings and I'm going to show you how to start this off from scratch. So what we call our 4-hour time frame is our swing structure schematic. From there, we're going to hop over to step number 2, which is our internal structure. From there, we'll hop over to number 3, which is fractal structure. Once you put all three together, you will have that crystal clear understanding of exactly where you lie in the market, understanding where expectational order flow and where price wants to go, understanding where you are in the market on the higher time frame and the lower time frame. You see, the biggest mistake that traders make is they want to hop over to the smaller time frame and just trade on the lower time frame without understanding what the higher time frame is doing. And that is exactly what these set of rules is going to help you with and be a game changer to your trading journey. So firstly, step number 1, if I had to start off with the real basics, I'm pretty sure you've seen this on YouTube before, pretty sure you've seen this in other mentorships, is price is always printed in the form of either lower lows, all right, price looking to target these weak lows, breaking these lower lows, pulling back into the previous range, and continue breaking structures to the downside, targeting these weak lows. Pullback, mitigating the previous range, break of structure to the downside, breaking these previous lows. Pullback, break a structure to the downside, mitigating and breaking through these previous lows. Then price could have that break of structure to the upside, pull back into the previous range, looking to target the weak highs. Price is always printed to you in the form of structure. Once you learn how to identify it, it becomes crystal clear and really easy to do, but it's just that most people don't know how to get started with that. There's a big saying that the trend is your friend. And it took me years to understand that concept. I could never understand when people say that the trend is your friend. How do you actually go and identify the actual trend and understand it on all the time frames? Well, this is exactly what took me about 2 years to figure out, which I'm giving to you guys now. All right, so to go and start off with, we need to go and look for our clear highs and lows and breaks of structure to the downside. So most recently on gold, if I come back a little bit, all right, we had this bearish move to the downside, a pullback, which makes this a weak low. We then had that break of structure to the downside. So this would be our 4-hour break of structure, which was created by the highest point in the previous swing range, which was this point over here, which becomes our 4-hour strong high. After that break of structure, we have the pullback into the previous swing range, specifically the supply zone over here. We're going to dive into refining this a little bit later in this video, but for now, let's just focus on practicing marking up our structure. After that pullback, we had created this weak low. So what is expectational order flow from over here? Is for price to have that pullback after the break of structure to then go and target these weak lows. So that is what expectational order flow would be. So we can go and highlight this as our 4-hour week. After that pullback, we then had that internal break of structure to the downside, which indicates price is now ready to go and target the weak lows, which we had this break of structure to the downside over here with a body closure. So another rule that I want you to keep in mind, 4-hour swing structure and the break of structure needs to happen with a body closure. These wicks over here is not a break of structure, that's just a sweep. After this body closure, that is now our break of structure. The highest point in the previous swing range, which was this high point over here, now becomes our 4-hour strong, which then this is now our most recent 4-hour weak low. So what is, comment down below, what do you think is expectational order flow from gold as where we are now? Is for price to have that pullback into areas of interest and relative price action of the previous 4-hour swing range from the high to the low to then go and target those weak lows. So this is currently expectational order flow on gold, not what is going to happen. Price can do one or two things over here. Price could go according to expectational order flow. It could continue targeting these weak lows from here, then have more of a bigger pullback into areas of relative price action in the previous swing range to then target the weak lows. Gold could also go bullish, break the strong high, cater for that pullback to then have expectational order flow to go and target the weak highs. All the system is, it's reacting to what price gives you. There's no need to predict price. All you do is you're marking up your structure and reacting to what price gives you, and from there you can get your high quality setups and entries. So let's continue with this. I want to take you over through the 15-minute time frame. So this is just a brief 4-hour time frame structure. So this is what we currently have on gold. From there, we hop over to the 15-minute time frame, which is our internal structural time frame. After price had this most recent 4-hour break of structure, how can we identify that price is now ready to go and shift bullish to cater for the 4-hour pullback into the previous swing range? As after every single break of structure, there is that pullback phase into the previous 4-hour swing range, which is then valid to look for buys and long positions to ride that 4-hour pullback. After that 4-hour break of structure to the downside, we had that M15 pullback. So after that valid M15 pullback, we then can have this as our 15-minute week low. because this was the most recent high that broke the 4-hour structure, so that makes this an M15 strong. The M15, after that 4-hour break of structure, had the M15 pullback with still expectational order flow to go and target these weak lows, which it had this M15 break of structure over here. Alright, so let's go and mark this. It's our M15 boss, which now makes this our new M15 swing strong high, because this was the most recent highest point that broke the previous week low, making that a strong high. Price then had that break of structure to the downside, that pullback, and what is expectational order flow to respect these highs and to target these weak lows. But price couldn't do that. Instead, it broke structure to the upside with a candle body closure. So that then signals, all right, after the 4-hour break of structure, M15 structure has now shifted bullish, which signals we're now ready to go and cater for the overall 4-hour swing pullback, which is then valid to look for long positions to ride that overall 4-hour pullback. After that M15 boss, we had a mini pullback over here, not all the way to extreme areas of the previous swing range, but this still counts as a valid pullback. So this then becomes the M15 new weak high, which we then had a break of structure to the upside. So this was an M15 break of structure to the upside, which is protected by this M15 strong low. All right, because this was a most recent low point that took out the previous high, weak high. So what is expectational order flow after this break of structure is to have the pullback and to continue targeting these weak highs. Pullback, continuing to target these weak highs. Pullback, continuing to look to target these weak highs. Pullback over here, price could never break the previous strong high, but instead broke the low. Pullback into the previous area of supply. So what does this signal over here? All right, so the M15 structure has now shifted bearish, which signals price is now ready to go and target the overall 4-hour week low, which is exactly how order flow was printed to you here. So all this is a reaction to what price prints you. But let's just move back a little bit, continue marking this up so that you can get the hang of this and learn how to do this yourself. All right, so over here was also an area for a valid long position, is we had a valid demand zone with the inefficient push, liquidity buildup, unmitigated, and also created the break of structure. So over here would have been 100% valid to look for longs, perhaps confirmations. We will cover that more in depth in the future on the channel, to then target perhaps supply zones in the more extreme area of the previous 4-hour swing range. So this would have been valid to look for longs over here to ride the overall 4-hour pullback. If we keep following this order flow, we had this M15 break of structure to the upside, protected by this M15 strong low. And over here you can see this was not a break of structure, this was just a wick. Price had that pullback targeting the weak high, which makes this an M15 break of structure. This over here was also an M15 break of structure. Price had that pullback, mini pullback, not all the way down to extreme areas, but then still created that break of structure, barely with a body closure, which counts as an M15 break of structure, making this the new M15 week low, which we then had that break of structure to the downside. Now expectational order flow is to go and target the M15 week lows and the 4-hour week lows. So hopefully you're starting to see, once you're able to mark out structure, understanding your 4-hour swing structure and pairing that up with your M15 internal structure, you can start to understand where expectational order flow is going to go. As after every 4-hour break of structure, there is that pullback. Once price prints that M15 break of structure to the downside after the 4-hour pullback, that signals structure has now shifted bearish internally and is now ready to go and target the 4-hour week lows. Alright, so this is just a quick breakdown on how you can start marking up structure. At the end of this video, I will show you how you can get way more in-depth insight into this and actually an entire private mentorship on this. But let's go over an XAUSD trade that I took on gold on Wednesday. So if I come over to the 4-hour time frame over here, I'm just going to come back to my previous gold chart as I have this all marked out already. I actually caught two trades this week on gold. All right, so over here, we had the previous 4-hour break of structure to the downside over here, which then price had that pullback, creating this as a new 4-hour internal week and our 4-hour strong high. So if I take a look over here, all right, so after that pullback, price's structure started to shift bearish with a break of structure to the downside. So what can we expect is that pullback to then go and target the week lows. So at the time, this was an M15 week low and this was a 4-hour week low. So expectational order flow was to go and target those week lows. After that break of structure to the downside, I marked out my valid supply zone with the inefficient push, had some double top liquidity. I will cover these concepts more in depth with you at the end of this video, so make sure to keep watching for that. All right, so as price had that break of structure, I initially actually took an entry on this supply over here, which actually got stopped out for a 0.1% loss. All right, then over here, we tapped into my extreme zone. I took what you call a triple M confirmation, which is an SMC concept taught by MentsFX, which is basically a triple break of structure to the downside on a really low time frame, most of the time between 1 second and 5 second time frame, which is just an indication that tells you that the supply zone is building up selling power and is going to hold. So I took a triple M confirmation on the supply, my stop loss above the wick, targeting the overall 4-hour week low and the M15 week low. All right, which was a total of 25 risk to reward. So I risked 0.2% on this trade for a 0.4% return, which was a total return of $6,000 at a $200 risk on my $200,000 prop firm account with Blue Guardian, which if you convert to South African rands was 115,000 rand in 1 day. In my Discord community, I posted both these setups in live time. So over here was the original sell supply zone. So this supply zone over here was the original supply that I took my sell off, which I just got wicked out and then obviously tapped into the extreme, which was this setup over here. Right here, we got tapped in. I took a triple M entry, same 25 risk to reward, targeting those M15 week and 4-hour week lows, and then got stopped out on the first entry, got tapped in with a tiny triple M on the 5-minute time frame with my stop loss just above that wick, targeting the 4-hour week low and M15 week low. As the trade played out, I then set my break even at the nearest fractal low, which I will cover more with you at the end of this video. Right over here is where I actually entered on my PC. I was obviously on my mobile app over here, but I use MT4 desktop version to place my trades. Much quicker to modify your stop losses and execute your trades. And this is where I set stop loss to break even. About 2 hours later, we then had news release, which pushed price in the direction of expectational order flow to those week lows. We nearly hit TP. We then pulled back and ranged for a bit until 3:30, and we finally hit take profit at 25 risk to reward. So this trade was sent in live time to the members as well, and a couple of you guys did catch this with me. So the entire understanding of this trade was structure, like I've just taught you the basics, supply and demand with a confirmation entry. And I will go more in depth in all three of these concepts with you towards the end of this video. Again, just explaining everything as we go through how I caught this trade. Something that you can take from a trade like this. Once you understand structure and expectational order flow, the markets become poetry in motion. And something else that you can take as well. News is the excuse to move price in the direction that I was already going to go, which was a prime example over here. News moved price in the direction of where expectational order flow is going to go. Over here was our final result. So the first entry was a loss at 0.21% at $482 on a $200,000 prop firm account. The second entry off the extreme zone was a 1 to 25 risk to reward. So this was a $200 risk trade for a 3% return at 25 risk to reward. So one thing that you can also take from risk management here is risk to reward and risk management always wins the day. My losses are so small, they're not even relative to the wins. So that is why when people ask me, don't you ever take losses? Do you ever take losses? I do all the time, but they're so tiny it's like 100, 200 bucks, it's not even relevant to the wins. And that is what is so fantastic about once you understand your expectational order flow, your structure story in the market. It allows you to catch high risk to reward trades like this and really minimize your losses. So as I've mentioned throughout this video, if you guys want to get access to a far more in-depth private SMC mentorship with me, where I go over the supply and demand zone basics, imbalance and inefficiency in supply zones, the best zones versus weak zones, understanding mitigation versus unmitigation, which institution controls the market, buying or selling power, risk entry, or should you rather take a confirmation entry, and refining your zones. Section 2 in the private mentorship goes over all 3 types of structure, live walkthroughs, theoretical mind graphs, complementing the lower timeframes with the higher timeframes in a 10 video course in section 2. Section 3, we go over liquidity, how to identify liquidity, double top liquidity, double bottom liquidity, support and resistance, trend line liquidity, and just pairing that up with which supply and demand zones have got the best liquidity and which ones are going to hold the best and take price to your points of the weak lows or the weak highs. Section 4, we go over specifically entry confirmations. Section 5 is all about Wyckoff. Section 6 is all about risk management. Over here, you'll get access to all of our trade rooms, my trade room specifically, where I'm posting my trades whenever I take trades. You will also get access to our funded V2 Matrix EA, which is based on an SMC hedging strategy. To give you an idea of the performance of this EA, this is the results of my $100,000 prop firm account, which has generated $5,000 in this month so far. That is the month of June, which is a 5% return and has avoided the 5% drawdown limits very easily. Other than that, you'll get access to our exclusive prop firm with 85% payouts in the same day to 1 day payouts, 10% off on all evaluations to existing funded members. You've also got the public trading rooms over here, where the public post their trades based on what they've learned on the course content and the private mentorship. So over here, you can go and post your trades. We will help criticize you and give you advice on perhaps what went wrong or what went right. And over here, you will find in the passes and profits room, members passing, getting those prop firm payouts on weekly basis using the contents that we teach in our Discord community. Our Discord is about 5 months old, and we have created a total of about 60 funded members so far and growing, which we are really happy about. But again, I'm going to emphasize on the point, this Discord is not some kind of magical potion that's going to fall into your lap. Well, it kind of is, because it's putting you in the direction of the right resources and the right information, but you still need to put in the effort. You still need to sit down, watch the course content, apply the concepts that we teach, practice seeing it yourself on the chart, watch how I trade in the trading room, comparing it to what I do and what I teach in the course content, and you will learn and applying what we teach live time in the market. So that's what's really great about this Discord. It's not just educational. We trade live with you based on what we teach in the course content, applying those concepts. If you guys want to get access to this entire community, I will leave a link down below. It will be the first link in the description. I will give you guys 50% off. So every viewer that is watching this video will get 50% off. The coupon will be in the first link in the description. Make sure to enter that on the checkout. If you guys want to see how I started trading about 3-4 years ago, I've still got those videos on YouTube, which is an excellent example of how far I've come in my trading journey. Those videos back in the day, I started off with RSI, double tops, and some kind of buy or sell algo, which kind of worked for me back then, but there was absolutely no risk management applied. But you're welcome to go and watch those videos and see how far I've come in the last 3 to 4 years trading. So what I recommend you do is click on the trading playlist over here. You can go and view that journey on YouTube, and also go and click on this link over here, or the link in the description, to go and get access to our private Discord community. Without further ado, take care, and I'll see you guys in tomorrow's video.